Hi everyone, welcome to the channel. Today our focus is going to be on Tesla, ticker TSLA, the company that popularized EVs. Synonymous with Elon Musk, Tesla has recently begun delivery of the Cybertruck. Additionally, several automakers have expressed intentions to integrate with Tesla's supercharger network, with future plans to incorporate full self-driving technology into vehicles, along with introducing a robotaxi. At one time, I did own this stock, but have sold out and not purchased back in. In the video, we'll look at Tesla's financials, perform a stock valuation, and at the end of the video, go into computer modeling to forecast the 52-week stock movement. So let's jump right into it. Looking at Tesla's financials, first thing I point out is this far right-hand column that represents the trailing 12 months, so the first three quarters of 2023 and Q4 of last year. Now, this top row, revenue, we can see this extraordinary growth over this past 10 years. Back in 2014, just below 3.2 billion in revenue, and trailing 12 months, almost 96 billion. So pretty incredible there for such a short time period to grow the revenue that much. Now, net income back in those earlier days, 2014 through 2019, we can see it was negative, but since then it's been positive. Now, I do use this as a data point for their valuation, and because they're a different company now from where they were back from 2014 to 2019, I'm going to remove those values. And also, since 2020 is quite lower than the prior 3 years, I'm also going to remove that so we kind of get a better indication of a growth rate when we go to the valuation. Earnings per share. So obviously back from 2014 2019, that would be negative since net income was negative. But we can see here since then, it has been growing, though the trailing 12 months is slightly off. You see dropping about 50 cents per share. And then dividends, Tesla does not pay dividends, so that's zero. And then shares, we can see they have been growing shares during this time period. However, trailing 12 months, they bought back some or reduced the outstanding share count. So we'll see if that continues moving forward. Book value has grown nicely. They only had one down year back in 2017. And then free cash flow. So we can see back again in those earlier years, 2014 through 2018, it was negative, and then nicely increasing during this time, though trailing 12 months is about half what it was back in 2022. Now, again, because free cash flow is used for the valuation, I'm going to remove these negatives. And I am also going to remove this 973 million and actually the 2.7 billion. This would give a higher valuation by removing these. And again, we can see here the most recent years, it's quite a bit higher. Now, if I leave 2020, it would lower the valuation, but I am going to remove it just to see how we look when we perform the valuation. Now, other data points like to look at is net profit margin. And same thing, I'm not going to consider these earlier years. I'm going to look at the most recent years. And I am really only going to look at the prior 3 years, which are 2021 through the trailing 12 months. And we can see they've been over 10%, which I like to see. This past trailing 12 months, approaching 22%. Last year, just over 15%. So hopefully they can maintain this net profit margin. And then one other data point I like looking at is return on equity. Now, automobiles is typically around 15%. And again, we're really going to focus on the last 3 years. And we can see here they've been 20% or higher. Last year, we can see over 32%. So again, hopefully they can keep these data points moving forward, but we'll see how that goes. Now I'm going to scroll down a little bit. We're going to look at some other data points on the chart, a little easier to see. This graph shows several data points based on the per share value. And the first one we're going to look at is the one in white for revenue per share. And we can see back in 2014, it was probably about $1 to $2 per share. going into 2020, increasing to $10. And then from 2020 through the trailing 12 months, jumping up to $30 per share. So pretty significant growth here. And even though during that 2014 through last year, the outstanding share count did increase, that revenue growth far exceeded that. And you can see that here in this chart going up and to the right. And that's what you want to see is for these data points going up and to the right. Next one, book value per share. Kind of saw that a few moments ago above, but you see it here now on the chart. Probably about zero or just below $0 per share back in 2014, and trailing 12 months getting up to probably just below $15 per share. So again, pretty significant growth going up and to the right. Now let me remove those two so we can see the last two a little easier. All right, so now look at free cash flow per share in yellow. So as we noted a few moments ago, back 2014 through 2017, 2018, it was negative, which we can see here. But since then, it was growing nicely. Though trailing 12 months slightly down, we did see the free cash flow dropping off from last year about 50% or so, and we can see that here. But still, it has grown. We'll see how this looks moving forward. And then earnings per share, again, we saw that a few moments ago. And as I mentioned, just like free cash flow was negative going into 2020, but then turning positive, we can see this nice growth here in the positive, getting up to just over $3, probably in that 350 range. But trailing 12 months, slightly lower, dropped about 50 cents to about $3.10. So hopefully they can recover in the Q4 of this year. So we see that next year, this continuing to trend upward. Now, let's move on and actually perform the evaluation for Tesla. So this initial setup for valuing Tesla shows an intrinsic value just below $94. Taking into account 90% margin of safety, comes out to just over $84. That's using a 20% growth rate over the next 10 years with a 10% discount rate and a long-term growth rate of 3%. Now we're going to make some adjustments here. It is Tesla, very popular company. So long-term growth rate, we're going to change that here from 3% to 5%. And we'll see how that impacts the stock price. So that jumps the stock price up to $121. And then with that same 90% margin of safety comes to just below $110. Now, up over here, we can see this net income CAGR at 39%, almost 40%. Now, if you remember, when we're looking at the valuations up above, I did remove the 20, I believe it was 17 value of 721 million. Now, if I kept that in there, this CAGR value would jump up dramatically. It would be like over 100%. But for using the last 3 years, which is what we did, it's just below 40%. Now, I'm only using 20%. I'm usually a little more conservative, but based on these other automakers indicating they're going to adopt the Tesla supercharging network, along with a future potential to release full self-driving, and then following that, possibly robo-taxis. I'm going to move this up to 25%. Now, again, it's lower than this net income, the CAGR that they had over the past several years, but still, it's a lot higher than what I usually go with. And with that, we can see the intrinsic value now has jumped up to 180 to almost $183 with a margin of safety of almost $165. So that would be like the point where I would buy in. Now, Tesla is currently trading about $250. One thing I am going to do, I'm just going to jump back up and show you what would happen if I kept that free cash flow in for that prior year that I removed at 2.7 billion. So let's just jump up. And right here, if you recall, I removed the 2020 value, and let's put that back in at 2.7 billion, and we'll jump back down. With that lower free cash flow value added back in, we can see the intrinsic value drop from just below $183 down to $160, and with a margin of safety going from $164 down to $144. Now, when we go back up, I'm going to remove that value again so we can get back to where we were with the prior valuation. Now that I got that 2.7 billion removed from the free cash flow, you can see we're back at the intrinsic value just below 183 and the margin of safety almost at 165. Now, because of that we removed that free cash flow value, that's why I'm not being too aggressive on this growth rate because I figured I'm already doing such by removing that value. As we saw, if I add it back in, it will reduce the valuation. Now, as I mentioned, Tesla is currently trading about 250. So let's just see what type of growth rate we would need to project to get at that current value. So I'm going to throw 30% in there. We'll see what happens. The intrinsic value has been updated with the 30% growth rate. We can see it jumped up to $272, and that 90% margin of safety brings it to just over $245. So pretty close to where the stock's trading at 250. So if you're more bullish or more aggressive on that growth, this price range is in that target. But for me, it's a little more aggressive valuation than what I would normally take into account. But if Tesla price drop does occur again, hopefully it does get in that ballpark where I'm more comfortable buying into. But let's look at some other data points for Tesla before we move on. And first, we're going to look up here in this section here, these 5 data points. So the first one, return on invested capital, very important one for me to look at. I like seeing over 10%, and we can see during these time periods they achieve that 10%. Book value growth rate, we can see same thing. They were averaging over 10%, really over 20%, except for the trailing 12 months, which is slightly declined to just a 4.4% growth, but still did very well for those prior periods. Earnings per share, same thing. It was growing nicely, but we did notice trailing 12 months slightly lower than last year. But we'll see how this fourth quarter plays out when they release their 2023 annual report. Sales, we saw sales had a continuing incline over the past 10 years. We'd see that here, well over 10%, over 40% on several time periods. And then free cash flow per share, we did see they had that big drop off from last year to the trailing 12 months. But still, very good data points. And we'll scroll down and look at a few more data points. PE ratio, so very high PE ratio, 61, almost 62. So again, to really value this at the current stock price, you have to be a lot more aggressive on that valuation, as I mentioned, up in 30% range. And if you are going to include that 2017 free cash flow at 2.7 billion, you probably need more of a 35% growth rate to consider. However, long-term debt to free cash flow very low. I like seeing over three. Under three. And we can see here they're 0.28. So very good there. They don't pay dividends. We already discussed the share count has grown over the last 10 years, though the trailing 12 months slightly lower. And net profit margin. So we're really only considering the prior 3 years, taking into account the trailing 12 months. And we can see here almost 16%. I like to see over 10. So doing very well. But let's move on and we'll go into computer modeling to forecast the 52-week stock price movement. Here in the computer modeling software, I already ran the analysis using 2 methods. First, the M5 rule shown here and random forest. So I already copied and pasted these results in Excel, which we'll jump over in a moment. So a little easier to see in Excel on a graph, but we'll look at it real quick here. So this is as of Monday, December 11th, and the far right-hand column is Tesla's closing price. So this is actually the weekly adjusted closing price. Right next to it is the S&P 500 ETF, and then several other data points used in the analysis. Now, if we scroll down 52 weeks, we can look here in December of next year. It's projecting a closing price at just over $305. So projecting a nice gain of about $55 a share using M5 rule. We'll jump over to random forest. And same thing, the closing price here on December 11th. The adjusted closing price, I should say, for the week, $251. And scrolling down for random forest, we can see a lot more bearish, actually showing a slight loss with the closing price in beginning of December next year at about $238. So again, it's currently trading at 250, so showing about a $12 decline from where we are today. But let's jump over to Excel. We'll look at all this in a graph. Back in Excel, I already got the results from computer modeling pasted in. And first thing I'll point out is this vertical red line that represents this prior Monday, December 11th. And everything to the left of that red line is the historical stock price for Tesla in blue, and everything to the right is the forecasted. Well, let's look at a little history of Tesla's stock price going back to 2010. Now, keep in mind this takes into account all the stock splits it had over the past several years. But back then, would be trading like around $1, maybe $1.50 or so, and we can see it had a gradual run up going into 2019, and then in 2020 we see this big spike starting to happen and the jump up. Now, also, if you remember from the financials, around this time here, 2019, 2020 or so, it's when their net income turned positive and they were free cash flow positive as well. So I believe the market took all that into account along with low interest rates. And we can see the big jump up getting almost to $300 a share in the early to mid part of 2021, then dropping off slightly later in 2021, but then picking up again in 2022, getting up to just over $400. And then remember, towards the end of 2022, last year, the market had a big drop, and we could see that here with Tesla getting down to under 150, probably in that $120 range. But throughout 2023, started to recover to where we are today at about $250. Now I'm going to jump over to another tab so we can look at the M5 rule and random forest results a little closer, along with taking the average of the two. We'll look at the M5 rule results first, and we're going to focus on everything to the right of that vertical red line. And what the M5 rule is showing is actually a slight decline for Tesla in the early part of 2024. And we can see here actually hovering around $250, sometimes below, maybe getting down to 240 or slightly higher, maybe around 260 or so. But then further out in the year, maybe end of Q3, beginning of Q4, so that August, September time period, we can see it's starting to jump up. And out in the early part of December, it's actually showing that stock hitting or just going above $300 in the $305 range. So if this does play out as shown, that would be about a 21 to 20%, 22% return. So not bad for 1 year result. But let's move on. We'll look at Random Forest, as we noted earlier. That's a little more bearish. So looking at Random Forest, so same thing going into 2024, showing a slight decline from where we are today, and then leveling off for that first half of the year, probably around the $240 range, and showing another decline, probably getting down to 220, but recovering and forecasting early part of December of next year being about $238, $240. So that would be a decline of about a minus 5.5% drop from where we are today at around 250. Now, let's just look at the average of the two. The average of the two methods obviously showing that slight decline in the early part of 2024, and same thing, somewhat flat for probably the first half of the year, but then dropping a little bit more in Q3. But just like in M5 rule, recovering and actually closing out in early part of December of next year, slightly higher where we are today at around $270. So if this does pan out, that would be probably about an 8.5% percent from the 250 that we're at currently. To recap, my valuation for Tesla falls within the $165 to $183 range, where I did use slightly higher or aggressive growth rates than usual. And at its current stock price of around $250, that is projecting a 30 to 35% growth rate, or possibly even higher might be necessary. But the potential for these higher growth rates seems somewhat feasible, considering these other automotive companies are going to adopt the Tesla supercharging network, along with the advancement of full self-driving technology, and robotaxi seems promising as well in the near future. Now, regarding the computer modeling forecast, the M5 rule did predict a nice promising return, closing early part of December at just over $300, which would be about a 20% return. But conversely, the random forest method is showing a slight decline in the stock, closing that early December time period at around $238. But I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.